So today we are going to talk about one of the most important things. We are going to talk about a strategy which is called the breakout and the retest strategy. So this is the royal blood way. So you are trading the royal blood way. You're not just trading like any other trader. So the professional way to trade the markets, brought to you by Royal Blood. My name is Inefes Guru and I'll be your mentor today, right? I'm the founder of the Royal Blood Forex Institute. So identifying institutional support and the resistance. So the first thing that you need to understand is to identify the institutional support and the resistance. So multiple touch validation level tested 3+ times indicate a strong institutional interest in liquidity clusters. So level yedu kana chinge ya testwa more than 3 times. It means that level there is an interest. Institutional traders, smart money, vari kufara that particular level. Ndosaka uchiramba chita sei vachidzoka pa that level. Vane ma orders aripo, pane liquidity and there is liquidity cluster. And then higher time frame focus, prioritize the H4 in the daily levels. This represent the big money footprint in the market. So uka focus on nema lower time frames. Panitikama a lot of fake outs which will happen to the market. So you don't need to focus with those lower time frames. You need to focus with the higher time frame levels. They tend to be more stronger. So you focus on levels that by H4 nepa daily time frame. But in this example, we are going to use the H4 time frame and the so distinguishing levels. So differentiate between minor intraday noise and major resistance structural barriers that define the trend. So kune ma levels ekuti anongoitika ari for intraday, koita ma levels ekuti anoholda for a longer period because ari ma major structural barriers anditika. And then the mechanics of a true breakout. So breakout plus volume spike is actually a good starting point. So candle close, price must close firmly beyond the level, not just weak through a strong body indicates commitment. So atidi kushandisa ma weeks because a week can just be a liquidity grave. So you need to use the decisive candle close and it candle offer to close and she in a body, not just a week like that. So I take up. If you can actually look right here, you can see this is a what? This is a candle body. Let us say that close and it. So volume confirmation. So institutional participation is signaled by a visible volume spike during the breakout candle. So you can actually see volume yanga low. Paitika a breakout up. Volume say increase. Why? Because pating a large orders all at once. So fake out warning. Low volume breakout often lack institutional backing and frequently lead to retail trade. So kind of volume is low. There's a possibility of a fake out, which means smart man say I could share my retail trader. So we want to avoid those breakouts and it. So the psychology behind this retest. So raw reversal. So once a major retest level is breached, the psychology shifts. All the resistance flip-flops to become new support and so like you can actually see here the market was in a strong uptrend. Then let us say breaker this previous a resistance zone and then breaker price as you can see can retest. So the resistance zone have a new support. So this is called this is a retest. No pattern that say but retest up and no pattern pinderashi my entries aid. Oh, this one is an institutional flow. So profit taking pullbacks. So early breakout, buyers exiting their positions create a temporary supply increase driving price back to the level. So anditi vanhu vakapinda in a market vanhu vapinda apa pane vanhu vapinda pane ma breakout traders. So ma breakout traders panongona breakout atota sei akutopinda nditika. So at this particular level vakutora close my positions avo. So when you are closing a buy position, it automatically becomes a sell position. So liquidity, my sellers apa akawanda ndosaka paitika a retest vanhu vapinda apa on this vaita counter trend pavanosvika uko vakutora ma orders avo. So yobva continue kumove in the prior trend andika. So institutional re-entry. So large institutions who missed the initial move look for value at the retest zone to build their position. So vanhu kune vamwe vanenge vaposa this breakout vakuda kuita sei kumirira painodzoka ubva sei mubva vapinda mapositions avo ma-institutional traders and it. So retest anatomy, confirmation signals. So a pin bar rejection. So long lower wicks at the retest level signals that buyers are aggressively defending the new support zone. Because we understand that trading is a fight between buyers and sellers. So market peno yapana apa kana magazi want to pin band kuti ma sellers anopusha market downwards and then my buyers over apinda nehasha oti mimi amngati say down. So they push the sellers upwards quickly. This is bazosara pane ka week aka anditwa. so bullish engulfing, so a strong green candle that completely swallows the previous red pullback candle indicate a shift in momentum. It now means my buyers are now strong, so closing basis, so the level must hold on a candle close. Wicks below are acceptable, but a close below invalidates the setup. So wicks closing below akanaka, but a candle closing below, the setup is no longer what? Is no longer valid. And then the royal entry, precision timing. So wait for the close, never jump the gun. Entry only occurs after the confirmation candle closes above the retest level. So atiri kumirira kuasuma kuti it's a retest takuenda. We need to wait for a candle to actually close, and then what? We end our position. So aggressive versus conservative. Entry at candle close, aggressive, versus waiting for a minor pullback to the candle midpoint, conservative. The difference in ipo ndekuti tinokanzira kuita mari kana tipinda aggressively, but the possibility yokuita sei yokunge tiri wrong iri higher, iri more dangerous as compared kune iyi yatinopinda chi conservative handiti. And then stop loss placement, positioned below the retest level with a buffer for market noise. So this measures the trade idea is invalidated before the loss is realized handiti. So isusu takatoona trade rinoda invalidated, stop loss inoita sei tinenge takaisa stop loss iri pa protection zone handitika. So we need to have a fixed risky rule. Never risk more than 1 to 2% of your total account balance per trade if you are trading a big account. But kana mune accounts echitozoto vazhinji venyu muri kutrada ma $10, ma $100, ma 200, never risk more than 20% of your account. So that's what I will recommend. So discipline, once stop loss is set, never move it against the trade. Give it room, trust the analysis and the level. And so can analysis that invalidated, stop loss no rower, and it's okay to lose, man, because this is trading. In trading we don't have to win every trade. That I say that pinda. So stop loss rower, it's okay. And then defining targets and scaling profits. So measured move, so use the height of the previous consolidation range as your primary target. This represents the minimum expected expansion. So structural targets, aim for previous swing highs or major historical resistance levels where sellers are likely to cluster. So trailing for trend, use a trailing stop to capture extended moves beyond the initial target, allowing winners to run in what? In strong trends. And then avoiding the retail trap, which is a fake out. So weak rejection, so price spikes above resistance but the board closes back inside the range. This indicates a lack of real buying pressure. You need to wait for the next candle. The next candle closer, reach bullish, then end. But if it closes reach bullish, you sell an. For example, this one. This is a fake out ticker. Why? Because the next candle close reach bearish, and so it's not a breakout, and so volume divergence. So price moves up on decreasing volume, a classic sign of weakness in institutional distribution. So ukaona wewe uchiti price iri move but volume iri kuita sei high school iri ku increase, price ya move upward but look at the volume, it's down. So it means it's just institutional distribution iri kuitika. So the wait rule, always wait for the H4 or daily candle to close to filter out intraday trades. Patience is your key defense against fake outs. So never rush. If you rush, so don't rush, or you need to check your particular trades. And then confluence, enhancing with indicators. So 50 EMA filter, only take long breakouts when price is trading above the 50 EMA. This ensures you are trading in the direction of the institutional trend. RSI overextension, so avoid buying breakouts if RSI is already deep in overbought territory. Wait for the retest to cool off the indicator, because kana ichiti overbought chino kanyanya kutengwa chinoita sei chino chakanyanya kutengwa chinenge chazara nemunhu wese. So people end up selling that particular thing because asina value. So value areas, use volume profile to identify high interest zones. Retest often are magnetized towards point of control, which is POC levels and POC levels, and then case study bullish breakout success. So phase 1, you see, this is our phase one, consolidation. Price builds pressure below institutional resistance. So you can actually see here there was pressure where yangaita se yangachiitika, and then phase two the breakout and yabva yaitika panapa. So phase 2, high momentum candle closes above the level with volume, and then phase 3, you can actually see the phase 3 is the what? Is the retest yaitika panapa. So orderly pullback to the broken level, now new support energy. So this is where we actually take our entry. So we take our entries for phase 3, and then phase 4 continuation. So strong rally is the measured move target energy. So tinenge takuta hold opportunity, so tasvika pachipa take profit point energy. So mastery and mentorship. So patience, wait for the setup to come to you. You don't just set up, you wait for them. And precision, execute the plan without hesitation. So takupa strategy, you need to follow the strategy over and over again. Usadauta, just do as you were taught. And discipline, follow your risky rules every single time. Learn trading like real business, not gambling. So if you wanna be part of the 1%, the way I break down the complex concept into simple and give you an edge so that you can actually defeat the market. If you join the 1%, it's guaranteed that you as a trader are going to make money, because this is how we break out. We break down the complex strategies into simple strategies. You need to join the 1%. So right now, we are going to go on our chart. Does it actually apply in practical or symbolic theory? So right now, without wasting any of your time, let's now jump onto trading view and see how best we can start teaching you. Alright, so the first thing that you need to do is you need to mark your key levels. You need to mark our support levels, our resistance levels, our order blocks, our FVGs, right? So right here, if you come to the market, you can actually see this is a what? This is a strong resistance level. It's a strong resistance level. Why? Because price here, that's a price here rejector on that particular level. Because if you can look right here, price here rejector right here and then price here rejector footing right here. So it's a strong one. It's a strong resistance level. And then it level we got this level E. This is a what? This is a strong support level. This was, so it means this was a what? This was a fake out. And then we had a strong resistance. Why? Because the consideration try to get a breakout structure right here. So this is a resistance level. They are considered breakout structure in ET, which means pane sellers akawanda. If this breakout didn't even, it means sellers are weak for that particular breakout. So another one here, this becomes a strong support. Why? Because you consider this what? This breakout or a change of character. So a change of character. So we are seeing that overall in a downtrend, but the market is actually what? We've actually changed from what? The market is shifting from being in a downtrend to what? To an uptrend, right? The bet comes CG on this particular level with our what? With our FVG, right here and here. So this is how we analyze the market. So with our what? With our own FVG, right here, FVG right here. FVG better say yabva move big upwards, right? So isu chatoda kuona ndechekuti breakout at no time ira toda kutimira breakout ichi this major resistance zone, because not market right now yachinja trend from being in a downtrend to what? To an uptrend. So we are anticipating that this is what? This is a strong resistance zone. Yekuti ka break market not come back the trend rate as it ningera chinga. So this is our chart of what? Of euro USD and dollar. So this is our resistance level and so this is our resistance level, and then this is our support level. So what we want to see the market actually doing, we want to see it need a retest by breakout by and to pane entry. So this is what we are anticipating to happen for market. So like look at what I said. I said this is what? This is a strong support level. Look what happened here for jet cover market. So what you can do right here, you can actually enter you can actually enter a buy trade right here, because we know with the this is a strong support market. So you can touch our support level. So as people trade breakout here, we can actually enter a position can look and trade market support and resistance ends. This is long trade breakout. So we want to wait for it to do a breakout, and then we act, and then we enter on the retest in the IT candidate. So that's what we are waiting for the market to do. So you can actually see how easy it is to actually trade forex if you know what you're looking for from the market. You can actually see how easy it is. Right, so look what happens. Guys, this is actually simple stuff. With the right knowledge, market time opponents could trade as a strong resistance one right here. Because market payashika up, end up down, payashika up, end up down. So this is another strong resistance one. And this is on it. Does it want to buy? Does it want to sell? You see, yaitika right here. So right now takumirira chi, takumirira a retest. Panetika a retest no bata say no bata kupindira our entry. Right. So takamirira a retest kuti engage chitika. Right, it's coming back for a retest. Yeah, you can see paitika retest peti pagadzirwa kakendo aka ndokada kuti nyatso kutarisa kakaita sekapin bar, so that we kaita se yangotora liquidity. Why does a retest happen? Because here pane ma orders asarira handiti. So here we are going to end our buy position right here. Kaita se close at this candle. Nabasa kuti candle racho ndere blue here kana kuti ndere chi kana kuti ndere red handitika. So yeah, stop loss is below the previous support level. So this one it could one is to 6.76, which means if you are risking $100, you are aiming to make 670, which is actually nice. So right now, let's edge our positions and let's end our positions. And then the position, our stop loss right here, and then our TP above there. So yeah, risking $31 to make $214. So let's give it time to see how it's going to play out. Are we correct or are we wrong? So that's exactly how we analyze our charts when we are trading these breakouts and retest things. So you can actually see this is a yeah, this is also previous high, right? Exactly. Let's see how it's going to play out. So he said our stop loss gets it or our TP gets it. So there's no way between it. So he said that one of those actually happen. No way between that. 1:5 is what ratio. So how strong it is, see how precise the end rate is. Yeah, that's if you understand, how good it is. Already we have taken how many pips? Already we have done 1:3, which means if you are risking $100, you are aiming to make what, $300 already, right? And the market is still moving. It's still moving there. It's still moving. So that's how you actually trade these breakout and retest. This is the current Euro USD. And we are anticipating that Euro USD no fana kusika kune